big risk and something to factor in when we think about the macro, because there's going to be some winners, there's going to be some losers, and I think that Japan is going to be a loser, right? Because they're a net importer, and we talked about how they're completely reliant, as is the rest of Asia. So Asia's getting a hit right now because the whole of Asia is very reliant on Middle Eastern oil, and which most of it comes out through the Hormuz Strait. Yeah, so they have these petroleum reserves, not much of it. If there is oil pressures, you can expect Japanese inflation to go in the wrong direction, but also growth. And that was my main sort of argument. So let me bring up what I just said in the tweet so I can just kind of touch on that a little bit. All right. So yeah, so he's put out this, basically he cites that the yen carry trade could be blown up again, and here I say that I highlight that stagflation risk is probably quite important to consider. Who has the biggest stagflationary risk? Like, who has the most negative impact to their economy? Is it Japan or is it the US? It's clearly Japan, being a big net importer of energy. The US produces its own, much more shielded. There's a few nice charts later on this, but I do focus on this part of the argument in terms of, which one wins out, right? You get dollar yen right, you probably get a lot of your FX sort of biases right as well. So that's how I'm framing it. I'm framing it around the stagflationary risks. Basically, who has the bigger growth shock? And, you can also say that inflation risk is probably lesser on the US side as well. And even if the BOJ hike and they have this growth risk, and Takaichi decides to support the economy even more, what does that do for debt? Even worse, right? So more fiscal spending as growth trajectory does not improve exacerbates those fiscal concerns. So you have JGB yields going up for the wrong reasons. And we've seen that the yen sells off in those types of situations too. And then the second part is that he's talking about the summer of 2024. And he said it was as a result of even just a modest policy move was enough to trigger that carry trade unwind, which is kind of ridiculous. We'll look at the chart just to put that into perspective. Okay, so this is the yen index. And in the summer of 2024, the yen plummeted. And then we saw a big rebound in the yen and the so-called carry trade unwind. And there was a couple things that happened around this point. Japan, the Ministry of Finance was intervening. In fact, if we look at the Japanese interventions in dollar yen, they were intervening. Okay, so we have one intervention here on April 29th to May 1st, right? This area here, 26, 27, 20, 29th here. So they were intervening here, but did that stop selling off? No, it didn't last. And then the Ministry of Finance took a better strategy. They started to wait for US data to actually go weak so that their interventions would stick. And on the Wednesday, the CPI came out weak. And then a week later, we had the NFP report somewhere as well. And remember, there was the Sahm rule debacle, rule being that if the 3-month moving average, I think, of unemployment moves up 50 basis points, it's usually a trigger for a recession and things like that. So most of this was a combination. It was a combination of weakening U.S. inflation and labor market data, and the MOF taking advantage of that intervention, and which led to this big unwind in cross yen. And this is the yen index, so yen saw a big rally, and that was the carry unwind of 2024. Massive, sharp move. And so are we now at a point where we're going to see the sharp move again, like these guys are suggesting? I don't know. But the core thesis there is still wrong, right? Saying that it was as a result of Japan starting to embark on this hiking cycle. It's a slow ass hiking cycle. It's a policy normalization. It's not anything to actually tighten policy. It's just to bring it back to real rates back to zero after decades of negative real rates. So I'm going to make the argument that this carry trade isn't probably at risk of blowing out, right? In fact, the biggest carry trade in the market in terms of total volume and exposure is actually via dollar yen. Yeah, you have a lot of other carry trades that pay a high yield, 6-7% in some EMFX types of currencies, and the high yield on one side and low yield on the other that you're paying for. But those are not as big as what it is to the dollar. It's the bulk of the carry trade is the dollar yen carry trade. It's borrowing in yen in yen to buy dollar assets. And so if we take that being the most important because that's the largest exposure, is the dollar more at risk like it was back in the summer of 2024? Is the US data going to get so weak that on its own in isolation that it triggers this unwind? No, because we're not seeing this in isolation. We're going to see some genuine weakness broadly throughout the world as a result of this. So it's about who loses and what the relative sort of winners and losers are from this. So we're seeing a lot more of this carry trade stuff. Ueda even highlighting that the economy could be hit significantly. So, that growth shock is probably bigger for Japan than it is the US. And given their fiscal concerns lurking in the background and the need to support that via policy, Takaichi also very pro-fiscal. I just don't see it happening. So some nice charts here. Geopolitical risk taking the bulk of the contributions to energy price moves. And then the cost of oil at $80 a barrel, comparing it to the impact on inflation for the Euro area and the UK. Now, maybe the pound is one other that we could consider, but Euro area, I think, has the better correlation there, and it slightly edges out. It starts to get even worse if we get $108 a barrel. I'm sure this is Brent. Is usually the benchmark. In GDP, it starts to get worse relative to the UK, and if we stuck in Japan here, I think it would look even worse than these guys to some extent, if not just as similar, right? And then also the GDP impact as well. Another nice chart here, there's no Japan in this, but if we see, this is US here, it's one of the positives. It wins. Along with all the other petro nation exporting nations here. Qatar, Kazakhstan, Norway, Kuwait, UAE, Iran, Iraq, Canada, Saudi Arabia, Russia, right? And a few others there. Brazil, Venezuela, Colombia, they also have some oil. Mexico, they also do have oil production there as well. But yeah, you can see that others now, the UK, Vietnam, Malaysia, some of these Asian countries, Australia, Thailand, Indonesia, Italy, India, China, obviously those with huge manufacturing bases will suffer quite a bit, along with Europe. They're not in this list of Europe and Japan, but you can be sure that they'll be down, in the bottom half as part of the losers.